Have you been thinking about getting into Forex trading? Forex trading opens up a world of opportunity for those who know how to do it properly. You can experience financial freedom and reap tremendous rewards for your trading skills. Unfortunately, many programs make big promises and throw students into the trading market without the proper knowledge and expertise to succeed. Fortunately, there is a solution. Great White FX Academy is the best place to start your Forex trading journey with the tools, resources, and education necessary to help you thrive in the market. Great White FX is an online Forex training platform that provides technical training that will help you succeed. It is of the utmost importance to have a proper qualitative education to participate in Forex trading, and that is exactly what Great White FX focuses on. You can reach us on Facebook at Great White FX and Forex Educational Academy, on Instagram at Great White FX, on Twitter at Great White FX, or call us at 234-803-930-61888.
Good afternoon all. You're welcome to today's Forex Outlook with Great White for the 5th to 9th of October 2020. These are the following pairs that we'll be looking at: dollar index, gold, EURUSD, GBPUSD, the Euro British Pound CHF, Aussie dollar, New Zealand dollar, dollar yen, Euro yen, pound yen, US dollar, Swiss franc, dollar CAD. So, taking much of your time, let's get down to business. So we're going to start with the fundamental calendar for the coming week. So looking into the fundamental calendar for the coming week, the major news we're going to be paying attention to will be the Australian cash rate news. This is an interest rate news. It's coming in by 4:30 a.m. West African time, so you need to be, most of us might be sleeping by the time this news comes out. So it's going to be a determining factor for the Aussie dollar. So most likely you're going to see heavy movement on the Aussie dollar this week. On Wednesday, we're going to have FOMC meetings minutes, and then on Friday, we're going to have Canadian dollar unemployment rate. So that's the employment rate and employment change coming in on Friday on the 9th. So with that out of the way, let's get down to business. So we're going to, let me set up my chart so that I can work on my chart. So we're going to start off with the monthly. If you look at this, we're going to start off with the dollar index. As always, we start off with the dollar index. If you look at the dollar index on the monthly, this is a monthly close. You can definitely see that we have a bullish engulfing candle here. And if you look to the left, that bullish engulfing candle came into this bullish structure here. So on the dollar index, on the monthly, we're having a bullish sentiment. If we drop down to the weekly, price is still within the body of this bullish candle. So what price is coming in is into this structure here. As where price is coming in, price is coming into this structure to recapitalize it to probably move higher. So if you drop down to your daily time frame, on the daily time frame, this is what it looks like. Price is sitting above 93.67. That's where price is sitting above. So with this, go to our file, and put in our levels. This is just basically what we're looking at. As long as price stays above this previous week's low, there is a zone here. Although we have this previous week's low at 93.53, there is a possibility that price may spike in down here. That's when I mean spike, you might have something like this. Price may spike down into this level. Then you have something like this. Then price may continue to the upside. So this is something you just might see coming into next week. So we need to be aware of that on the dollar index. So the next way we're going to be looking at is gold. Looking at gold, we're going to start with gold from the monthly. Gold has a little bit of challenge his own monthly chart. September closed as a bearish candle, as you can see. If you notice, this is the first time price is closing below this all-time high. That all-time high comes in at 1920.85. This is the first time price is closing below it. So with that, we go down to our weekly. Now when we get down to the weekly, this is where it gets a little bit slightly confusing as to gold's direction. If you notice, this is a weekly chart. We have a weekly master candle here, what I call a range candle. If you notice, 1, 2, 3, 4, 5. 5 weeks within the body of this candle. But when price broke the low, it closed back inside. So that in and of itself is pointing to the fact that we might be looking at a slight bull trap at this level here. So that points to the fact that we might see a little bit correction upward in gold. So if we go down to the daily, I might say that, like I said last week, there is a level here. Once that level gives way on gold, we might see gold move higher. As already, you can see the formation on the weekly. On the daily, you can see the formation here. This points to the fact that once price takes out this level here, the level I'll point it out once I get into the time frame. So we're looking at gold. So looking at gold, basically, this is how your charting is going to look like. The key level is 1912.07. As you can see, I pointed this out on Friday. Price did close below that level. So for as long as price stays below this level and 1917.16, which is the previous week's high, there is a tendency we might see a correction. As you can see, there is a W formation here. So there is a possibility that price may stroll down to here before moving back up. But should you get something like this, then we might see a move higher on price. So that's just the situation, scenario we have on the gold for next week. So gold might see below 1917.16 and we might see further correction to the downside. But a close above this level will send gold higher. As already you can see, there is structure here and price is coming into that structure. So that's reason for concern. So the next pair we're going to be looking at is the EURUSD. So we're going to start the EURUSD from the monthly. If you look at the EURUSD on the monthly, you can see we have a bearish engulfing. We have a bearish engulfing, but the thing is that engulfing has a long upper week, long lower week. So if you drop down to your weekly time frame, that's what you have here. So price is doing a little bit of correction into a range, into this area that price broke. So we might be looking at a break and retest scenario here. So if you move down to your daily time frame, the range becomes very, very clear. You can see, so price tried testing that area here. We could say it comes in here, that's at 1.1749 and rejected. So looking at this, I would say, looking at the EURUSD, as long as price stays below 1.1769, that should price rally, when I mean rally, that should price move up into this area and get rejected, then you might take a short position down towards any of these levels here. So that's what we need to watch out for on the EURUSD. For the EURUSD, I would say bias is tilted to the downside. You should be looking to sell into rallies on the EURUSD. Next pair we're going to be looking at is the GBPUSD. So looking at the GBPUSD, if you look at GBPUSD on the monthly also, you have a bearish engulfing. On the weekly for the GBPUSD. If you drop down to the monthly, if you drop down to the weekly, now you are having this a bullish engulfing on the weekly. All this points to the fact is that we might see a little bit of correction to the upside before it move down lower. If you drop down to your daily, you can see a lower leg. You can see the lower leg formation here. You can see it. So we might see a little bit of correction. So how do you trade this coming into this week? You put in your levels. When you put in the levels, this is what you're looking at. as long as price stays below this level here, that's 1.307, that's 1.3007. As long as price stays below there, so if price rallies in here, spikes above and closes back below, that's something like this. Price spikes above, spikes down, something like this, then you have a scenario like this, then you can take a short position on this pair. But should price break above it, that's a reverse, you see something like this, then you know it's going to move higher. It's going to move higher. So that's just what you need to be aware of on this pair. So if price breaks above and uses this area as support, it's going to move higher. So the next pair we're going to be looking at is the EURGBP. Looking at the EURGBP, we're going to start from the monthly. So looking at this pair, sorry about this. Now I still have this. So looking at this pair, if we look at this pair, there is structure here, as you can see. Twice, price moved into it and moved away. This gave a bullish engulfing, taking out these two candles here. So this has created a bullish structure. So what price might be doing is recapitalizing into this structure. So looking at the price from the daily view, it still looks like as if it's moving down, but by the time I put in the levels, it will become a little bit clear. So when you go down to your 4-hour time frame, you mark up your levels. So those monthly bullish structure, that is what you have here as this main dotted line. So now these two areas, that is 0.9075 and 0.9000, they become your line in the sand. As long as price is above these two levels, there is a tendency you might see price move high. So that's the level you need to watch on the EURGBP. That's 9057 and 9000, 0.9000. So those are the levels you just need to watch out for bullish evidence. If you get bullish evidence here, then you might take a long position. But should these two levels fail, then price is going to move lower. So the next one we're going to be looking at is the GBPCHF. Looking at the GBPCHF, we're going to start from the monthly. If you look at the pair from the monthly, it has a kind of bullish, bearish engulfing, but it has a long lower wick. Although this looks bearish, it has a bullish undertone. It has a bullish undertone. So what this in effect means is, if we drop down to our weekly time frame, you can see there's a range here. The range comes in at 1.2258. The range low comes in at 1.1601. So that is a range you need to play. And if you notice, there is bullish, very structure here. So price may run into this area. If it gets rejected, it's going to move lower. So drop down to your 4-hour time frame by putting my values. So when I put in my values, this is what I have here. So as long as price stays below, the line in the sand here is 1.2012. That's here, this level here. Because price can do something like this and rally, hit here, drop back like this, and move lower. That's just what you need to be aware of. So that's just what you need to be aware of. So some of the buyers are price may still trying to move to the downside. But should price drop to the upside, but should price drop to the downside, you have structure here you need to watch out for. So if price comes in here, there's a possibility it might bounce towards this previous week's high. So the next pair we're going to be looking at is the Aussie dollar. So looking at the Aussie dollar, we start from the monthly view. On the monthly view, we have a bearish engulfing. As you can see, we have a bearish engulfing. Although it has a long lower wick, but the range, this candle still, you could say this is a dark cloud. It still has its own strength because it closed more than 3/4 into the body of this, into the range of this candle. So if we go down to our weekly time frame, you could see that price is correcting a little bit. price is doing a little bit of correction. If you go down to your daily time frame, it becomes very clear. Price made this high, dropped, couldn't get higher, and fell back down. So now we have this area at 0.7214 as our line in the sand. What do I mean by line in the sand? That is the level you need to be watching for. As long as price is below that level, there is a tendency that price might continue to move to the downside. So it comes in here. That area comes in here. So you have between 71.93 to 72.35 as your resistance buffer zone. So should price run in here and close back below, then you can take a short position. But should price close above it, then you might see price moving up towards 0.7324 area. But for now, this pair, you should be looking to sell into rallies on the Aussie dollar. The next pair we're going to be looking at is the EURAUD. So looking at this EURAUD, it's a little bit kind of like giving mixed signals. If you look at this pair, it's still more like in a range. This major candle here is still holding everybody in a range. And the bullish, kind of like partial bullish bullish Pearson pattern, but with a long upper wick. So if you drop down to your weekly time frame, then you can see that there's a range here between this level here. There's a range. Price tried to break above it and got rejected. So where is price coming into now? It's coming into this bullish structure here. That's where it's coming into now. So if this area repels price, then we might see a move to challenge these levels here. And that level is coming at 1.6583. So how are you going to take this out? You go down to your 4-hour time frame. These are the levels you're going to be watching on your chart. If you notice, there is structure here to your left, and then there is structure also down here. So those are areas you need to watch out for. So as long as 1.6316 holds as support on this pair, that's the first level. The next level is 1.6263. As long as this level holds on this pair, there's a tendency you might see a bounce to the high side on this pair. So my bias is cautious longs on this pair towards the upside. So next pair we're going to be looking at is New Zealand US dollar. So looking at this pair, we have what looks like a bearish engulfing but long lower wicks to the downside. If you drop down to your weekly time frame, you can see there is an M formation here. You can see it. So price is testing this neckline here. That neckline is at this point. So on this pair, you put in your values. When you put in your values, this is the zone you should be looking to take a short position between 65.57 and 66.87. As long as if price comes in here and gets rejected, then you should be looking to take a short position to the downside. But should price break above 66.87, then you might see price head towards 67.60 area. Of this pair, my view is cautious selling to rallies. That's my view on this pair. The next pair we're going to be looking at is the USD. Is the USD yen as a dollar yen. So looking at the dollar yen, there is something here that is going to be visible only on the weekly. It's not going to be visible on. If you look at this chart here, you have this low here. Price broke it, but didn't stay below it, closed back inside. This in and of its own points to the fact that we might be looking at further correction to the upside on this pair. So if you look at this, you see the sharp spike into this area and the long lower wick. That points to the fact that we might be looking at a bullish continuation on this pair. So if you look at this pair from the 4-hour time frame, you'll be looking to buy dips on this pair. As long as price stays above 1.0474, you'll be looking to take longs on this pair towards this previous week high. But should this level give way, then we might see a retest of this structure down here. The next pair we're going to be looking at is the Euro Yen. So looking at the Euro Yen, We're going to start from the monthly. If you look at the euro yen from the monthly, you can see a very clear bearish engulfing. But if you also look very carefully, you could see something here. So this move might be to retest this structure here. This neckline here. That neckline comes now 12188. So this might just be a correction to test here. If this area holds, then price will move back up to the upside. So if you look at it on the weekly, there's a possibility that price may still pull back down a bit. But as you can see, the weekly gave a bullish formation, but it has a long upper wick. So if you drop down to the daily time frame, now you can see there is structure here. So I think price has tested it once, and that's what gave this bounce. So looking at this pair moving into the new week, if you drop to your 4-hour time frame, looking into the new week, if you look to your left, there's a little bit of structure here. So now this is where there's a little bit of challenge on this pair. There's an M formation here. So on this pair, as long as price stays above 122.80, that's this level here, there is a tendency it might move to the high side. But should price come up to 123.64 and get rejected, then you might see price move down on the downside. So on this pair, I will advise cautious. Just watch to see what happens. If it gives you bullish evidence at 123.02, then you can take a long position. So that's it for the euro yen. The next pair we're going to be looking at is the GBP yen. That's the pound yen. So if we look at this pair from the monthly, we have a bearish engulfing on the monthly. As you can see, we have a bearish engulfing on the monthly. But if you watch, there is something here. See this low, price took it out and bounced. So that move is still in place. If you move to your weekly time frame, you see there is structure here. You see the weekly has already a bullish engulfing, taking out the range of these two candles. So if you move to your daily, nothing. It has wicks to the downside, but the ranges are very small. So if you drop down to your 4-hour time frame, you see we have this is a consolidation. So if you put in your levels, as long as price stays above 134.36, there is a tendency it might continue to the upside. But should 134.36 give way on price, then you might see price move down, move a little bit lower. But I'm still slightly bullish on this pair. The next pair we're going to be looking at is the USDCAD. So looking at the USDCAD, for some time, if you watch the previous videos, I've been seeing that this pair has a bullish bias. As you can see clearly here, this is a bullish piercing pattern on the monthly. If you look at the weekly, seems to be in a corrective mode, although this is not bullish structure, so we need to be aware of that. Then if you move down to your daily time frame, you can see that price is staying above 132.61. So if you drop down to your 4-hour time frame, you put in your values. Price is having a little bit of challenge at 1.3325. But as long as price stays above 132.67, there is a tendency it might move to the upside. As you can see, price may be trying to do a W formation, but I don't know if it's going to be a lower leg or a higher leg. So on this pair is still bullish. So you'll be looking to take long dips. If the pair dips and continues to move up, you join to the upside. So the last pair we're going to be looking at is the USD Swiss franc. So looking at this pair, if you look at this pair here, you see these two equal lows here. Price broke it. When price came back for the retest, it didn't get rejected. If you notice this candle, this is a monthly candle. This monthly candle closed back above 0.9184. That is not a bearish signal. So if you drop down, so which means to the fact that they might dip a bit, before moving higher. These two candles, this has already created a bullish structure here. So if you move to the weekly time frame, as you can see, you already have the structure. This is called an inside bar, which might just be a recapitalization of this structure here, or this one here. So drop down to your daily time frame. When you drop down to your daily time frame, like I said, the whole of this move down here is bullish structure. So how are you going to trade this pair? This pair, my advice on this pair is to stick to buying dips. As you can see, there's a 4-hour range here. The 4-hour range, the high is at 92.24 and the low is at 91.62. So you might see something like this. Price may either come in here and move higher, or price may do this, then move higher. But should you have something like price dropping here, retesting here, then failing to close back up, then you're going to see a lower move in price. So these are just possible scenarios on the USDCHF. So I thank you all for taking your time to attend. The video will be posted on our YouTube channel. Please don't forget to subscribe and like the video if you find the video helpful. And if you would like to contact us, our details were shown at the beginning of the but let me just pull it up again so that everybody can see it. If you still wish to reach across to us. So if you would like to reach across to us, this is our YouTube channel, Plan Your Trade, Trade Your Plan. You go there, subscribe, switch on the notification buttons. If the video is helpful, click the thumbs up. This is my WhatsApp channel, my WhatsApp number. You can give me a call or chat me up there. This is my Telegram handle. My Twitter handle has a little bit of challenge, so it's not operational at the time. So I thank you all for taking your time to attend. Wish you a blessed weekend and a beautiful trading week ahead. Thank you.